Hey guys, welcome to another YouTube video here on the Trading Academy. In today's video, I'm going to be showcasing how I made over 10,000 US dollars trading Aussie dollar, utilizing market structures, supply and demand, and liquidity. So with that said, let's dive straight in. So focusing on Aussie dollar here on the daily time frame, overall I could see that the daily time frame was ranging in between this swing high and in between this swing low, with the 50% mark highlighted in blue over here. Overall, looking at the change of characters within the market, we could see that we had a bullish change of character by wicking above this previous wick over here on the 13th of April. So overall, looking at change of characters, we can see that the daily time frame is bullish from this low in towards this high, so we could potentially see further upside. Overall, market pulled back in towards that 50% mark for confirmation for additional longs once again. When trading the overall range on, let's say, daily 4-hour 50-minute, just try and draw in the 25 and 75% mark as well, because you'll really obviously see that the market reacts to those points as well. For example, here on the daily. Now, looking at the 4-hour time frame, because we know that the daily time frame was looking good for potential longs. Let me just adjust this range tool once again. We can see is that the overall 50% mark of the daily time frame is acting as an area of support. Now, I don't really use support and resistance, of course, in my analysis. However, it is always a good additional confirmation to utilize, especially when it comes to reaction points. Not for taking trades, but for reaction points, it's really helpful. So that's pretty much kind of like the first confluence that I used. And now it's kind of hard to draw a number one, but this is a number one. So the number one confluence that I utilized was the premium versus discount tool. So as we can see, we were coming in towards a discount, in towards that 50% mark, and that is additional confirmation for potential longs. Now, number two, what is number two? Number two is that we have a fresh area of demand. So that's additional confirmation that we can look for those potential longs up in towards the highs. So S/D. Confluence number 3, that is liquidity. Let me just write down the L. So what we can see over here is that we have the swing low trying to get taken out by this low, by this low, by this low, and by these lows. So what we can expect is that once we come in towards this area of demand, and this further solidifies this area of demand, is that once we come into there, we should see a bullish reaction back up in towards the highs. So that was additional confirmation for my trade. And then, of course, confirmation number 4 is that if we look at the overall swing structure on the 4-hour, is that we came in towards the downside, high, low, and then we had this potential, we had this low, of course, formed over here. We started seeing that pull back up in towards the highs. Then what did we see? We saw a close above this previous high, meaning that the 4-hour swing structure now became bullish. So overall, the swing structure is bullish, even despite it looking like some kind of rangy barcode. We are still bullish when it comes to swing structure. So just keep that in mind. So then let me just delete this for the sake of keeping my chart clean. What we were looking for, and after all of those additional confluences, we were looking for a potential long on the 4-hour. So with that said, we can now dive in towards the 50-minute and look for those potential longs. So if we look at the 15-minute, overall, we could see that we were bearish coming in towards the downside, right? We had kind of like this grab of this liquidity high, tapping towards this area of supply, which was also stacked on the 4-hour, and we were moving very heavily in towards the downside. So we saw that break of structure over here. What do we expect after break of structure? We expect a pullback. We got that pullback in towards this high, and now we were nearing this area of 4-hour demand, which I just previously highlighted on the previous 4-hour chart, from where we want to be looking for those potential longs. So when I want to go long on the 4-hour, what I do is I go in towards 15-minute and I look at market structure and I look at supply and demand. So what I could see is that market structure wise, we were getting a break of structure over here on this low, or an internal break of structure, because the overall swing structure on the 50-minute is bullish from this low all the way up in towards this high. So that's pretty much just the same as that daily swing range, which is also now your 50, or the daily change of character. That's also your 50-minute swing range. So looking at the overall 50-minute swing range, just quickly drawing in my premium versus discount tool, what we could see is that we were trading inside the discount of that swing range, further solidifying my 50-minute bias for a potential long in towards the highs. Now, looking at the 50-minute market structure wise, so market structure wise, we were seeing an internal break of structure. So when we see a break of structure, and again, let's say the swing structure on the 15-minute is bullish, right? How are we going to identify that there's going to be a potential pullback or further continuation of the trend, right? Because for that further continuation of the trend, what you kind of want to see is that change of character, or let's say that internal break of structure, to then kind of like, yeah, trade, let's say, further up in towards the highs once again, right? So one of those kind of like ways of seeing that is looking, okay, do we have, let's say, the 4-hour demand zone over here? And do we have within that demand zone also a 50-minute demand zone to then look for longs? So in this case, we had that. Of course, it's going to be high probability if we, for example, trade the break of this high and then see that pullback and then, for example, a long. However, in these kind of instances, I'm happy to be more aggressive because there's a lot of confirmation, 50-minute being overall swing bullish, a daily bullish change of character, 4-hour demand zone, 4-hour liquidity, premium versus discount, blah, blah, blah. Of course, I highlighted those confluence points previously, but overall looking, this is why I'm happy to take that long on the 15-minute time frame, looking for further upside. Now, pressing play and looking at how price came in towards this zone, what I'm always looking out for is, okay, when is the London market going to be starting? So over here, it's 10:30 in Dubai, which means it's 7:30 in London. So at that point in time, I know, okay, this is kind of like London liquidity coming in towards the market. So we can kind of like see this big push, in towards the downside, taking out this kind of like low and acting as potential liquidity. So we saw this internal break of structure. After break of structure, what do we expect? We expect a pullback, right? So I'm happy to kind of like trade that potential pullback in towards the highs of this overall internal structure range, with this being your high and this being your potential low, right? So I'm happy to kind of like trade, let's say, in towards the highs above kind of all of this liquidity, which is located over here, and then, for example, look for a potential short once again. But in this specific instance, I'm happy because of course, the 4-hour and the 50-minute demand lining up beautifully. Now, this is your change of character high over here on the 15-minute. So once that 15-minute change of character high breaks, then I know, okay, the overall swing structure of the 15-minute is bullish. We're currently in the pullback of the 15-minute. So we're seeing kind of like these internal break of structures, right? Again, let me just showcase what I mean. Swing structure bullish, and then internal, you've got a lot of structure, but let's just focus on most recent. Swing structure bullish, then boom, boom, boom. And then, for example, this change of character over here lined up with 4-hour demand, 50-minute demand can kind of like be the first teal sign. Okay, we're going to see this internal break of structure before, for example, continuing again with the overall swing trend on the 15-minute. So then this is your swing pullback, and then your swing. So I hope you guys understand that. It's a little bit maybe of a more complex kind of like concept, but I'm trying to simplify it as much as possible. So now waiting for that change of character, right? If that change of character comes, then I'm happy to look for that potential long. So now drawing or continuing the market, what I'm now looking for is for a liquidity low, because what I can see, of course, is that the 50-minute area of demand has been created, and then the next major confluence in my strategy, which just has to be there all the time, is liquidity. And that liquidity was created with this initial pullback, which we saw over here in towards downside. There was no liquidity kind of like in that move up, right? But now we've created liquidity on this low. So I know, okay, if the market comes back down again, then I'm extremely happy to look for that potential long. So at this point in time, I was happy to draw on my order over here at the beginning of the demand zone with my stop loss on the low, just slightly below the low over here. So in regards to target, I'm more than happy to kind of like target a 1, 2, 3 over here, which pretty much is in line beautifully with this high over here. So I know, okay, if this high goes, then yeah, Aussie dollar is likely gonna kind of like push higher, and then I can keep this trade on for a far longer period of time. However, due to the fact that I am trading counter trend here on the 15-minute internal break of structure, I am gonna kind of like manage my risk more aggressively. So looking at the trade over here, what we can see is that the market came back down in towards the downside, grabbing or building liquidity, below the lows over here, just waiting to tap in towards this zone. So I was very patient. And then what we could see is that, okay, price tagged in towards its demand zone. Straight away, we see this bullish engulfing candle here on the 15-minute. And I'm very confident that the price is going to start moving further up due to that bullish reaction. Now, boom, boom, what we can see is very aggressive reaction, taking out this high over here At that point in time, I set my stop loss to break even, and I was looking, okay, where is kind of like the first area in the market where I'm going to be taking partials? Well, for me, it's pretty much this high over here. These highs not really interesting, but this high for me is very interesting because I can clearly see the liquidity being built over here. So I know, okay, once all of these highs go, we could potentially kind of like see that further continuation in towards the downside again, with this being your high, this being your low. So it's kind of like a whole analysis that you're making inside of your head. I wish I could just kind of like share my brain with you guys, but this is kind of like what I'm looking at. It's like really a work of art. What you're looking at is all of these highs over here. I know, okay, once these highs go, then you're going to kind of potentially see a bearish reaction. So when we reach those highs, I'm going to kind of be looking, and especially this specific high over here, I'm going to be looking, okay, is there some profit that I can take off the table? So I was already seeing, okay, we're seeing some kind of bearish reaction. I was still holding just the trade here at break even. Don't fully remember, but then yeah, we pushed back up in towards the highs. We can see we just missed my stop loss, so I pretty much got blessed by the markets, and we saw a push in towards the highs. Boom. Okay, yeah, grabbing the liquidity above this high, grabbing a liquidity above all of these highs, showcasing a bearish reaction. So at this point in time, I took some profits off the table and I just let it run break even. And at this point in time, we could see, yeah, let me see. Yeah, so at this point in time, stop loss got hit at break even for the remaining of what I had on the table, and we could see very clearly that the internal structure was continuing in towards the downside. So we can see again, low and this high, kind of like the internal structure overall continuing in towards the downside, and that's why I was kind of like being more aggressive. This is now your new high, and then again, boom, your low. So now we've got a new, and let me just remove all of this artwork. Now we've got a new internal break of structure over here on this low over here. And now again, you can look for that potential long, of course, if it lines up with 4 hour and the 15 minute to trade back up in towards highs. Now this is pretty much the area of supply that you want to target, with this being your liquidity high. So now again, I'm going to be looking, okay, do we see kind of like a change of character, then trade once again back up in towards the upside with the overall 4 hour area of demand acting as your area of demand. Yeah. So that's pretty much what I was looking at, but as we can see, a lot of kind of like bearish momentum in towards the downside. Also for a change of character, you need to take out, what is it, like this high over here, or this high. So that could, yeah, kind of like see the majority of the move, excuse me, already be taken. But it is a potential trade that you could take back up in towards this area of supply. But yeah, that was pretty much the trade that I took. I hope you guys enjoyed this breakdown. If you have any questions, make sure to join the free Telegram channel in the description down below. Have a great day, and we will speak very soon. Thanks, guys.